This training is all about the 4 must-have foundational legal protections for your e-commerce business. Avoid being included in the 53% of small businesses involved in a lawsuit. The first is entity choice. Choosing the right entity to run your e-commerce business is the foundation. Without this, you open up yourself to personal liability, you risk losing your house, you risk losing money in your bank account, you risk losing your car, you risk losing all of your personal assets. It is by far the most important step in your e-com journey. So what are we going to learn? We're going to learn why you need a legal entity for your e-commerce business. We're going to know how to choose the correct entity for your business and when and where to set up your entity. So let's talk about the why. Why you need a legal entity for your e-com business. When we're dealing with entities, the most often question or pushback I get nearly every time with my clients about the why they need an entity is, well, what if I don't have the funds to form an entity yet? Can I just start as an individual or sole proprietor and switch later? My answer is always no. I do not recommend it, and I'll explain why shortly. I get it though, funds are limited in the beginning, but remember, you are never too small. Just ask Judy from the first video. Also, it's not that easy to switch your business from a sole proprietor to a proper legal entity. If you start off as a sole proprietor, you individually will own all of the business assets. Websites and emails will be in your name. The business licenses will be in your name. You can't just transfer it to an LLC or a corporation without potential tax consequences, administrative headaches, and other issues. So I highly recommend starting with an entity. Okay, so let's get after the why. The number one reason you need an entity by far is liability protection. It protects your personal assets. It protects your personal assets from creditors, from any vendors or suppliers that may sue you, from any customers that may get injured with your products that may sue you, and from competitors that may sue you as well. I'm sure most of you have heard the term liability protection, but I want to make sure you know exactly what that means and how it plays out. So let me walk you through what will happen if you are sued for breach of contract, product injuries, IP infringement, or any other reason. The other party will file a lawsuit in court. If they win, they're going to get a judgment against you, which is just an amount of money that you are required to pay to them. So say the judgment is for $1 million. It could be more, it could be less, but just say the judgment is $1 million. If you didn't have a proper entity set up for your business, that judgment would be against you personally. If you can't pay the total judgment back, which most of us would not be able to, the other party can collect in other ways, like putting a lien on your house, cars, bank accounts, and collecting a percentage of any wages you might have until it's paid off. You run the risk of having to file for bankruptcy. Now take the other side. If you did have a proper legal entity set up, the judgment will be against your entity and not you as an individual. The other party could only collect what the entity actually owns and has, such as the inventory and business bank account funds. They can't touch your personal assets. Other benefits include financial benefits. There are tax reductions and expense write-offs, as well as leverage you can receive in negotiating an agreement or deal with a legal entity versus yourself individually. This is the perception that you are a real business and it isn't just a hobby, where customers and suppliers could really try to take advantage of you. It also makes you look like a real business, right? So being able to tell your families that you are the CEO and owner of a legal entity, right? Which, if you ask me, is pretty amazing. We talked about the why entities are so important for your business. Now let's talk about how to choose the right one. We mentioned earlier the sole proprietor. If you're a single owner and you don't do anything, this is the default. You're just a sole proprietor. You have no liability protection. There are also no formalities to file. You don't have to file any documents except, of course, your seller permit and possibly your EIN for some platforms. All of the taxes just flow directly to you for your personal income tax purposes. If you have multiple owners, the next entity to consider is a partnership. This is the default entity if you have more than one owner and, again, don't do anything. Similar to the sole proprietor, a partnership offers no liability protection. So, if one partner does something on behalf of the partnership and is sued by a creditor or a vendor, or customer, or anyone else, they could come after you personally as well as your partner. Again, just like the sole proprietorship, in most states there aren't any formalities. There aren't any state filings except for the seller permit. However, if you do choose this route, a well-drafted partnership agreement is recommended. And again, for tax purposes, the income taxes will flow right through to your personal return. The next entity to consider, and the one I would normally recommend for an e-commerce seller, is a limited liability company or an LLC. Most of you have probably heard of this. Your LLC, if set up and operated properly, is a separate person in the law's eyes. It offers you liability protection. You do have some state filings with an LLC. You need to file what's called the Articles of Organization, or some states will call it the Certificate of Organization or Certificate of Formation. You file this with your Secretary of State. You also obtain an EIN number, which is your federal tax ID number through the IRS. You'll need a seller permit, also known as a sales tax ID, state business registration, and a well-drafted operating agreement. Then each year there's an annual filing to keep the LLC up to date with your state. It does offer the most flexibility when structuring how you want your business to run, especially if there's more than one owner. For taxes, there are various ways you can be taxed. If you're a single member LLC, taxes just flow to you personally through your personal income tax return. This is called disregarded. You could also be taxed as an S Corp, a C Corp, or even a partnership if there's more than one owner. Those topics are a little too complex for this training, but I did want to mention it here. The last entity to consider is a corporation, and there are two types based on how they're taxed. There's a C Corp, which offers you liability protection just like an LLC. It does have double taxation. And I'm not going to get into the weeds with this, but basically, if your entity is a C Corp and your corporation has profits at the end of the year, the corporation is taxed on the profits. And then any shareholder that receives dividends pays individual taxes on those amounts. So that's why it's called double taxation. There are a lot of formalities. You need to file the articles of incorporation. You have annual meetings and minutes, and you have to put together the minutes for those meetings. There's a lot of paperwork really involved. You also have bylaws and shareholder agreements that govern the operations of the shareholders. The S Corp offers the same liability protection and requires the same formalities as a C Corp, but the difference is that unlike a C Corp, there isn't double taxation for an S Corp. Just like the LLC, taxes flow through to you personally. There's a ton of advantages of being an S Corp, and in fact, an LLC can as well. But that is beyond the scope of this training. Here's a chart breaking down the differences between each entity. It might be a little hard to read this, so I'll send you a copy. Just shoot me an email. Okay, we now know the why and how to choose. The next question is, when should you set up your entity? What's the old adage? It's something like, if you want a beautiful large oak tree you're proud of, when is the best time to plant it? 25 years ago, and the second best time is now. So the very first thing you should do, deciding to start your e-commerce business, is set up your LLC immediately. It's the foundation of your business. Remember, without it, from day one, you could be personally liable. You never want to enter into any agreement before setting it up. You don't want to pay anyone money before setting it up. Remember Judy from the last video. The last item to consider is the place to file and set up your entity. A lot of my clients will come to me and ask, well, why don't I file in Wyoming or Delaware? Aren't they business friendly? Yes, they are. But my response is always, always, always your home state, except in a few circumstances. Well, I won't necessarily get into those. But the reason is that you're always going to have to pay your state taxes in your home state. If your state charges for income taxes, most states also require you to file your entity in the state where you're doing business, which is normally your home state. So if you're running your business out of your house or an office in your state, shipping, packaging, paying contractors and employees, you're considered to be doing business there. So that's a short lesson on the why, the how, the when, and where legal entities.